Hello, everyone. Adam Bergman here, tax attorney and founder of IRA Financial. On today's Adam Live, kind of a special edition, breaking news, President Biden's new 2024 budget proposal and the impact on IRAs. So this actually didn't get a lot of attention, obviously for good reason with the bank crisis that we're kind of dealing with. And I don't want to spend too much time on that today. I'm going to do another podcast on that for another time. Thankfully, that doesn't impact IRA owners. IRA Financial has zero exposure to any of those banks. We use Capital One, which is eighth largest bank in the country. So, but it's still obviously pretty important topic, ramifications for not just depositors and tens of thousands of startups, especially in the SVB case, but also for equity holders and bondholders, right? How is it precedent that the government can come in, make depositors whole, but basically just ignore corporate structure and corporate ladder in terms of assets and priority in terms of bankruptcy by basically just ignoring bondholders to the delight of depositors. We shall see. I'm sure there's going to be quite a few lawsuits on that. But let's focus on the President Biden's budget, which came out March 9th, which was right around when all the banking fun was starting with SVB and Signature, so Silvergate Bank. But before I get into the details, and there's some very interesting provisions here. Some I definitely do not support. Some I do. This was announced March 9th. Again, budgets, especially in a situation where you have a Republican-controlled Congress, Democratic Senate with very small majority, and a Democratic president, essentially mixed government, this budget is not going to pass. Okay, let me just say that before I get into all the provisions. So the provisions are interesting because it does highlight a path forward to let us showcase what President Biden could focus on when he runs for re-election, if he does, right? It gives you an idea in terms of his policies, his initiatives, his pet projects that he really believes in. And we got a taste of that in Build Back Better and some other bills. But I think we can expect with a divided government, which I'm all in favor for. I like when the House and Senate are divided. I think that offers very valuable checks and balances, and it doesn't allow one party to just run rogue on the rest of the country. So and that's just not a Democrat or Republican thing. I agree with that across the board. This forces members of the Democrats and Republicans to compromise, senators on both sides of the aisle to compromise. That's what Washington should be all about. So that's what I expect to happen. I think you're going to see a lot of like one-off bills. You're not going to see this budget in the entirety. This has 0.00 chance of passing. And usually these budgets never pass anyways, unless it's a situation where, one party controls presidency, Senate, and Congress, and still there's no guarantee. We saw that with Build Back Better, where you had Senator Manchin and Sinema basically put pressure on Biden and actually killed the BBB legislation. So you're going to see some temporary resolutions, omnibus spending packages, things like that. So the government will keep running, but you're not going to see some of these proposals. So let's get to it. There's some doozies. I'm going to get into the kind of the big ones first, and then I'm going to talk about the IRA ones, which have a little bit of a Build Back Better theme. The good news is there's no zero zilch prevention of alternative assets in IRAs. It's mostly on capping large IRAs, things like that, which was also part of the Build Back Better bill that never passed. This isn't going to pass either. But again, it gives you insight into where Biden's going and his team. If he does run for re-election, he's telling you, hey, I'm going after rich people. So let's start with it. Number one, business corporate tax is going to go from 21 to 28%. C corporation tax is going to go back up to 28%. It's at 21 now. During a pre-2017, it was essentially 15% under 50K and then 35% over 50K. So it's 7% increase. That's not going to happen. Individual taxation, they want to impose a 20% minimum tax on individuals who have more than 100 million in assets, and they actually want to tax death and capital gains tax it. So there's not a lot of detail in terms of the death tax, how that would work, in terms of step up in basis or not, but it goes back to a lot of the themes. Again, this is themes that President Biden and some of the Democrats, especially the progressive side, have been really pushing, taxing the rich. Obviously, $100 million bucks, a lot of money. If you have 100 million assets, you 20% minimum tax. I think even rich people wouldn't care about that. So, but again, I just don't see this being part of any bill this year. But this is something that Biden pushed for. Cryptos are obviously a hot area. They basically want to get rid of wash sales. So now what you can do is there's no wash sale rule. So you can buy Bitcoin today and sell it tomorrow, and buy Bitcoin tomorrow and sell it the day after and the day after. Whereas with equities, there's a 30-day rule. If you sell Tesla, you can't buy it back for 30 days. That may be tough with cryptos because people use cryptos as part of, well, not a lot of people, but some do in terms of commerce or transfers of assets, whether it's Ethereum tokens or Bitcoin, whatever it is. So we'll see how that applies. Will Ethereum apply only to Ethereum, or will apply to Ethereum type coins? I don't know. I don't think that is probably not a great chance of passing, but ultimately that will pass at some point. They want to apply mark-to-market rules for digital assets. Dealers and traders basically have to mark the values of these assets on a day-to-day basis, or at least quarter to quarter. I don't think many people would have an issue with that either. And they want to have more info for digital asset transactions, including NFTs, which again is in your 1040. So I'm not sure what more they can ask for. The real property one's a biggie. I don't think people understand this. Biden's talked about this in the Build Back Better bill. He wants to get rid of 1031 exchanges. He just thinks rich people use it to defer taxes, and he don't like it. That's not passing. I can tell you, I have friends in the 1031 world. Their lobby is super, super strong, and that's just never going to pass. And they also want to get rid of, they want to treat 100% depreciation recapture on a sale of a certain asset as ordinary income instead of a reduced tax rate. So not a lot of momentum either way on that. The big one for partnership taxation, they want to get rid of the carried interest, which again was part of the Build Back Better. That didn't go anywhere. They also want to prevent basis shifting, kind of, again, 1031 for real estate and partnerships. And they want to include a 3.8 Medicare tax and self-employment tax on centralized partnership audit regime. So more of a complicated partnership provision. But you see where this is going, right? It's just adding more tax to the wealthy, taking away some tax benefits to the wealthy, whether it's 1031s and wash sales for cryptos. Now let's get to the IRA sections. There's only about 5 or 6 to go through. The first one is they want to cap IRAs at 10 million bucks. This was in the Build Back Better bill, never passed. This is the Senator Wyden initiative. I'm surprised Biden put this in here. Honestly, it didn't get any, didn't have any momentum or really a lot of push for it. There's less than like 500 people in the whole country with more than 10 million on IRA. So don't really understand the need, but shows you kind of where he's going, right? It's all about limiting people's wealth. Again, I obviously disagree with it, but his point is, hey, what's too much wealth? 10 million bucks, too much. Take it out as a taxable distribution. Who's to say what's too much, right? It's in a retirement account. Someone made some good investments. Why are you capping it? Well, we'll see. That's these IRA provisions, 0% chance of ever being part of a budget bill. No one cares about them. They want to eliminate Roth conversions for taxpayers over 400K or 450, I should say, for joint. This is never going to happen. Why? Congress needs conversions. They bring in a lot of tax money. So this is just a game to show that he's trying to punish wealthy people. 450,000 married file jointly is wealthy. It's middle upper class. It's not like billionaires, right? Two income earners, 450 is a lot of money. You're doing great, but you're not a billionaire. They want to eliminate backdoor Roth contributions. Again, just basically going back to like pre-2010, if you make above a certain amount of money, they just don't want you doing after tax to Roth. I don't think that's going to happen. That could. It's not happening as part of a budget, but could it be brought back in a bill in 4, 6, 8 years? Yeah. If the Democrats somehow take control of the Congress, Senate, and presidency again, that's on the table again. Okay, so that is potentially there. It doesn't bring in any tax revenue, pretty much, and it pushes more people to Roth. And Biden believes this is a tool that rich people use. The disqualified person stuff, they basically want to make the IRA disqualified. Now it's the IRA owner. They want to add the IRA and their beneficiaries. I think the idea, most tax attorneys and tax professionals kind of assume this would be the case anyway. So when I'm looking at prohibited transactions, I'm always looking at the IRA, their owner, the beneficiaries, to see if anything's prohibited. Right, to have a prohibited transaction, you need two things. You need a retirement account and you need a disqualified person, which is the IRA owner, the beneficiaries, lineal descendants, entities controlled 50% or more by such person. So this isn't a real big provision either way, because it's what people always understood, that the IRA owner are disqualified. They want to get rid of fiscs and discs for IRA investors. Not a big deal, and no one really does them anyway. So fiscs are like foreign sales corporations. There's some tax strategies to take advantage of discs and fiscs, put your IRA in there, and generate tax-free revenue. I think I've heard of, in 13 years, maybe 2 people I've heard of wanting to do this, right? And both of them, once they heard what was at stake, they were just like, nah, not really worth it. So they're going to basically try to prohibit it. And they want to go from 3-year to 6-year statute limitation for prohibited transactions and valuation. This is on the table again. It's not going to be part of any budget, but if the Democrats do control all facets of government, it's back on the table. It's definitely a potential. I don't think the 10 million maximum has any chance, but I do think getting rid of the backdoor Roth, a 6-year statute, the disqualified person provision I mentioned, I think those are on the table. And I mean, I wouldn't be excited about them. And also the fisc and disc, which no one really cares about anyways. But the 6-year they really want, because they feel like they need more time to kind of figure out what the stuff is happening. And in most audits, the 3 years runs and it's too late to audit a transaction, and they feel like they lost a crack at some of these transactions. So they want the 6. We'll see if they can get it. So those are the IRA provisions. As I mentioned, not very meaty. Some of the Build Back Better themes, which didn't make it in the bill, and it's not going to make it in this 24 budget, and it's likely not going to ever make it into a future bill, although it's on the shelf. So the Democrats can always pull the book off the shelf and go back and use it. Not big revenue raisers, especially the eliminating Roth conversions is a revenue loser. The 10 million cap's not going to raise much money. Eliminating the backdoor is not going to make any money because it's obviously after tax or Roth, so there's no taxable income. The fisc and disc, no one does them. It's not going to raise any money. The disqualified person won't raise any money because anyone smart always assumes that IRA and their owner and their beneficiaries are disqualified. And the 6-year statute could make them some money. So that's something I think they could roll with at some point. Let me just go back to some of the more general provisions I wanted to mention, which again, won't be in this budget, but I just got to let you know because I think they're interesting. And again, it just gives you a theme, an idea of what the president, the Democrats, want to be part of their policy. They know this isn't going to be part of the budget. They know it's dead on arrival. Most budgets never make it through as written. They know that, but it's really saying, hey, you're on notice. This is what we want to do. And with the federal election coming up in a couple of years, like we're all on notice. This is kind of stuff they want to do. Whether you agree or not, you like it, not, they're just telling you. They want to put a minimum tax on billionaires. We talked about this, 25% minimum tax on all income of the wealthiest, 0.1% over 100 million. I'm not sure anyone cares about that. They want to repeal the Trump tax cuts for the wealthy. They want to go back to 39.6 instead of 37. And Biden claims that no one making more than the 450 or 400 is going to see $1 of tax increase. That may not be true because you technically could have 300,000 in income of 10 million in your IRA because you just focused on IRA investing and have to pay tax on excess Roth distributions or IRA distributions. So it's not necessarily true, but that's kind of the concept that President Biden's really focused on is, hey, I'm going after the rich. Anyone who makes under 450, you're good to go. You're not going to have any increase. In fact, you may reduce your taxable revenue with taxable income, which I don't think is true, because if you have a corporation, the corporation is going to pay more tax, which means you're going to have less money, even if you make 100K. And 450 is a lot of money, but it's not billionaire level. What else I think is important? He wants to enhance child tax credit. Again, who's going to argue with that, right? It would beef up the credit to $3,600. So no one's going to be against that. He wants to also improve Medicare finances, right? Who's going to argue with that? Reduce prescription drug costs. We're all in favor of that, obviously. He wants to make Obamacare subsidies permanent. Most people would be happy with that. Lower Medicaid spending. Sorry. Again, people will be good with that. Make college more affordable. Increase the minimum Pell Grants, which people get between $7,900 for 23 and 24, and wants to increase the maximum amount by $900 over the 2 years. Pell Grants goes to certain qualified students who get a boost and help pay for school. We're all in favor of that. School is way too expensive anyways. I mean, my kids are young, they're 12 and 9. I can't imagine what college would be. Maybe better off just literally putting the money in a bank account, and in 10 years they'll have money to buy a house. My personal opinion, I'm a very well-educated person. I have a college degree, a law school degree, a master's in tax law. I think for most cases, college is a waste of time, honestly. If you have the money and your parents are going to pay for it, great. It's just 4 years of partying, not going to learn anything. If you want to go into finance, investment banking, be a doctor or lawyer, you need it. Otherwise, you just want to be an entrepreneur, figure your life out. Personally, I don't think it's worth $70K a year. If you can find a college for under 10, 15K, do it. I think if you're paying 50, 60, 70K for college, that's not an Ivy League top 25 school. It's a waste of money. And it's unfortunate. In Canada, schools are still cheap. That's like the one thing Canada has over the US. Way better education system. School's almost free if you live in Canada. The medical system sucks in Canada, but from a education standpoint, it's excellent. It really is. They want to do universal preschool and affordable childcare, which I agree with 100%. That should definitely be, we're the richest country in the world. We should definitely be helping young parents out. So that's it. The big stuff, just to recap. Again, this ain't coming. This ain't passing. No chance. Zero. But I wanted to express it because it's important to know what's on the table, what President Biden believes in, what he would love to include if he could. But Congress is controlled by Republicans. Even though it's a slim majority, the Republicans are not going to be in favor of pretty much any of this stuff, especially the increase in taxes. So the big stuff, corporate tax rate, 21 to 28. Get rid of the like-kind exchange, 1031. Get rid of carried interest as ordinary income instead of capital gains. Get rid of washout rules for cryptos. Billionaire tax if you have over 100 million bucks. And then for the raw stuff, IRAs, cap it at 10 million. Eliminate Roth conversions over 450. Eliminate backdoor Roth. Expand definition of disqualified person. Just make it more clear that IRA owners and IRAs and disqualified person beneficiaries are DPs. The fiscs and discs no one cares about, and extend the 6-year statute. That's pretty much it. The rest of the stuff is more just education, Medicare, health, prescription drugs, stuff like that. That's really not part of my retirement focus. So that's it. That's today's podcast. I did a kind of a Monday. I'm actually traveling this week, so I'm not going to be able to do it on Wednesday. I'm going to try to do one on Friday if I can on the banking situation. I want to call it a crisis because I think the government did what they had to shore up the depositors, right or wrong. We can discuss that another time. I'd like to see what they do for bondholders. Equity holders obviously last in line. They're going to get wiped out. But bondholders deserve something, because if not, no one's going to buy bonds, especially of smaller banks, if they're going to just get wiped out on a run. They'll buy bonds of JP Morgan and Citi, but not necessarily a smaller bank. So that's going to have an impact on how banks can raise funds. So they're going to have to figure out what to do with bondholders. But from a self-directed IRA standpoint, there are some interesting provisions I mentioned. They're not going to be part of this bill, but if you don't want the government to touch your IRA. Again, just the Democrats, Biden, the progressives, there is this inclination as part of their policy to really put IRAs in the same bucket as like rich, wealthy billionaire tax. Some people may not have an issue with a 10 million IRA. I mean, listen, there's under 500-600 people in the whole country, so why are we wasting our time, right? Doesn't make sense. But again, it just shows you what they're attacking. They want to show that they're attacking wealthy billionaires, rich people. They have this arbitrary $450,000 amount, which honestly, the highest tax rate is like highest income threshold for tax rate is like 650. So I don't know why they picked the 450, but they claim that no one over 450 would have an increase in tax liability. I don't think that's true personally, based off the IRA provision, the corporate tax. Indirectly, they're going to be paying more tax. And in the IRA context, if they are have over $10 million in IRA, they'd have to take a distribution of the excess. So that is a direct tax, even if they make under 450. So they got rid of all the alternative asset stuff. So you can, that's good. That's not coming back, right? The IRS understands, Congress should understand and does 99.9% that 1974 ERISA was created. It's important that IRAs, 401ks have exposure to alternative assets as a source of diversification, hedge against inflation, and removing that is a major issue, not just for retirement account holders, but also limiting the ability for businesses to raise capital, others through private placements, innovation, venture capital funds, things like that. So that's not even on the shelf. That's in the garage somewhere that hopefully will never be brought out again, right? It's under the 1983 lawnmower that doesn't work. Those provisions have no hope, but there is a chance they get rid of the backdoor Roth. As of 2023, you can still do the backdoor Roth. 2022, you can still do it up to April 15th. So you got some time. And the 6-year statute, we'll see whatever happens with that. Other than that, that's it. That is, in a nutshell, the President Biden's 2024 budget proposal. All the key ones you need to know: corporate partnership, international tax, real estate, cryptos, and IRAs. Covered it all. Hope you guys enjoyed it. Sorry I kind of went off schedule this week. That's why you got to subscribe, because if I go live just randomly, or Friday I may do a live depending on what happens with the banking situation or something else, just subscribe. You'll get notified when I go live, and hopefully you'll enjoy the content, because that's what I do. I want to give you all the most updated information and obviously the best quality content I can, so you can come and hopefully are already, but become even a better self-directed investor. So thanks for watching. Really appreciate it. Have a great rest of your day. Chill, relax. We're going to be okay. It's not another 2008. We're good. And have a great day. Thanks.